Hello traders, the title of the video is how to trade RSI divergence little by little. Alright, so the RSI stands for Relative Strength Index. Alright, today we'll talk about RSI indicator or RSI oscillator. If you want to learn more to master how to trade overbought, oversold, or the RSI divergences, go to www.dayprotraders.com. The link is in the description section. Alright, so in this tutorial I want to share with traders how to trade the RSI divergence little by little. There are many ways that we can trade the RSI divergences. I've recorded videos in the past, but in this tutorial we want to talk about how you trade it little by little. Why? That's a very good question. Did you ask that question? Excellent question. The reason is sometimes traders will see the RSI divergence, either bullish divergence or bearish divergence. In this tutorial we are dealing with a bearish divergence, and the financial instrument that we are analyzing is an American stock that belongs to the financial services sector, Visa Incorporated. Do you have a debit card or a credit card? Do you use debit? Do you use a Visa card? Oh, yeah, this is the stock for the Visa stock on the monthly chart, and I'm using TC 2000 for the American stock. Though sometimes I use TradingView, excellent trading platform too. Alright, so you can see I'm using the RSI period 14. Can you read it here? RSI setting period 14. This is what we call the default setting. Generally you'll see on many trading platforms the default setting for the relative strength index is set at 14. We are monitoring 2 weeks trading activity on a daily chart. So 14 days candlestick bar. Because I'm on a monthly chart, I am analyzing 14 months, so more than a year candlestick bar. This is what this RSI period 14 is reflecting to us. If you're using the RSI period 14 on the hourly time frame, you are analyzing 14 hours trading activity, and so on and so on. Okay, so when the RSI form a lower high but the financial instrument exhibits a higher high, that's what we call a bearish divergence. On the other hand, when the RSI exhibits a higher low in a downtrend and the price exhibits a lower low, that's what we call a bullish RSI divergence. So today we are looking at a bearish divergence. In fact, I can title the video how to trade bearish. I will add here bearish RSI divergence little by little. So because we are talking about bearish divergence, it's a warning. That's the first thing that I said to trade it before. So you say, Joe, you talked about it before, you are talking about the same thing. It's not the same thing. And also, it's not the same financial instrument. So this video is suitable for those that are trading American stock, those that are trading RSI, and also RSI divergences, and those that are trading the Visa stock. Alright, and we want to talk about how we trade that bearish divergence little by little. So because we are expecting it's a bearish warning that the price has a high chance to go down, how do we trade it little by little? Very simple. You want me to tell you now? I'll tell you now. You want a price, you are looking for bearish trading setup after talking about the price action itself. The confirmation of the bearish divergence with bearish trading setup. So the price action is telling us that now we have a bearish trading setup after the RSI bearish divergence. If you see RSI bearish divergence and the price does not confirm it with a bearish trading setup, ignore that warning. Or do not trade that warning straight away. So here we have a bearish divergence for Visa. It's a practical trading, how one should trade it now. So the first reaction, so the first step, oh, here it is, show you now. See, bearish divergence, the minimum that you are looking for, common central line is broken. That's how you're going to trade first time. So that's my common central line there. The trend line that we draw very, very, very close to the price. I'm coloring it now in pink. So I'm on the monthly chart, right? So that common central line is broken because that candlestick buy close below it. After, is it after? Yes, after. Okay, after the bearish divergence. A high and a lower high by the RSI period 14 on the monthly chart. Now that candlestick bar close below it. So the common central line is broken. Alright? So what are we looking for? We want a retest. That's the best scenario. You won't be the only person waiting for that. A lot of professional traders. So you see that this candlestick bar did open here, and some people jump on it and sell it. You see here, it did open here, it went down. So those swing traders or those that are selling, if they don't manage their trade carefully, that winning trade can become a losing trade because after it went down, it went back up. Because the professional want a retest of that common central. Sometimes the price may not retest it. It will just continue to go down nicely. And you may say to me, Joe, why is the retest? It's not there. We're not going to invent it. We're not going to enforce it. Well, there's nothing you can do about it. Okay? All right. So it break below and then retest it. That is now after this candlestick bar here is closed, we have what? A bearish trading setup after what? A bearish RSI divergence. So here you must, not you may, you must use different time frame trading method. So because I'm on a monthly chart, I'll combine monthly chart. I'll be looking for my signal on the daily chart. All right. We're looking for my signal on the monthly chart. So the signal can be also break below, retest, or common central line is broken on the daily chart, something like this, or the price form a lower high. See here. See here on the daily chart, you see. You are seeing that people are selling on the edge of that bearish trailer. So after this common central line is broken here, that's a signal there on that daily chart. Then from there, I'll go to the hourly time frame to intraday trade. I will be doing the same thing here on the hourly time frame to look for my entry point to intraday trade to sell it. Price going down, the price looking for what? A support level. So when you start trading there, bearish RSI divergence little by little, because it's going to go down, isn't it? Which means the price looking for support level. So you want to draw where are the support levels. See the black line that I have on the chart here. This is the high of 2018. This is the median line of the candlestick bar on the yearly chart. This is the low of the candlestick bar. I've done it before in another video. That's how I know. All right. So draw all the support level because it's going to go down. And you are selling it. You want to know where is the next support level, so you may know where to take your profit. Traders say, Joe, you didn't talk about the exit strategy. The exit strategy is relative to the risk tolerance of all traders. Well, that's why I don't talk about it. But I recorded a video. You may look on YouTube and say, how do I exit? How to exit the trade like a pro, or how do I exit the trade like a pro? I posted a video because they asked me, how do I see the trade? There are at least 2 or 3 videos like that, either by Joe Trio channel or 2-4 Stock Trader YouTube channel. This video that I'm recording today will be posted at Day Pro Traders YouTube channel. So the first time you are selling is after this candlestick bar is closed. So you are the one selling it like this. You see, you are the one here. Now, little by little, remember that that word, little by little. When can you sell again? You break below a key level and retest it, and the candlestick bar, this one thing don't forget, and the candlestick bar on that time frame is closed, you have another bearish trading setup. You can have a bearish trading setup, but you may not have a bearish signal. So which means the price can break below a key level and retest it, but that bearish trading setup will not generate a bearish signal. So therefore you can't sell. You can only sell if there is okay, a signal to sell. If there is a signal to sell, you will go to the lower to the entry time frame, yes or no. This is about trading like a pro, yes or no. All right, that's how we do it. So today, as I'm recording the video today on the 23rd of January 2019, the time is 22:07, 7 minutes past 10. In fact, today I recorded 3 or 4 videos. Trade that are foreign and know that I do that. You may know, say, oh, it's not today. Recorded it. Sometimes one day I recorded 3 or 4 videos. Sometimes one day I may record 7 videos. I'm a YouTuber, all right? So I record them first, then I YouTube them. YouTube means you push them in one by one in the tube. It's all in the tube, in the pipe. All right. So now this is the candlestick bar of January. We are talking about 23rd of January because I'm using a daily chart. I'm using a monthly chart. Before I can talk about the next level, talking about little by little, the next trading setup, that monthly candlestick bar must close. Otherwise, I may have to go to another lower time frame, and the first one is the weekly chart. All right. So again, remember what I said to you before? It's going to go down. It's looking for a better support level. Yes or no? So you see this candlestick bar. You got a tail. That one also got a tail on the monthly chart. The tails are indicated to our support level, corresponding to a doji here. There is a support for Visa. Oh, I'm talking about travelers. Visa Incorporated. Okay, which is the median line of 2008, the range of the candlestick bar on the yearly chart. Okay, the median line is at 13209. So today, in fact, I recorded a video about 5 intrinsic reasons why one should not ignore the yearly chart. I will be posting that video at 24 Stock Trader YouTube channel. Digit 2, digit 4, Stock Trader YouTube channel. So, if you can't see it there, it means that probably I haven't posted there. But in few days, I'm talking about 5 days time, so by the 28th of January, it will be there. The price now, okay, that's a support level, yes or no? But again, look at this one. The opening price of this monthly candlestick is a key level. The opening price of that one also. Apart from the median line of the yearly chart, there's a key level there. Okay, here, that's the closing price. The opening price, this was near that line. So we wait for that candlestick bar to close, and then we'll come back and then we implement a top-down trading method as we did here. This is how we trade, okay, the bearish RSI divergence, little by little. So all in all, what you are looking for, did you see a bearish divergence? Yes, good. RSI form a lower high when the price form a higher high. Okay, common center is broken. That's the first step. I will sell it, okay, little by little. We sell it, get to the next support level, you can take profit. All right, you will try to bounce out. Traders will show the first, will try the first profit, something like that. Sometimes it may go down, boom, 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 boom. Sometimes it will do like he's doing that, like he's doing here. Go down, bounce up, sell it down, bounce up. Until it finds support. It doesn't mean that we continue to go down. It may continue to go up from here, upward. But all we are looking for, after the bearish divergence, RSI divergence, which is a warning, if we see a bearish trading setup by the price itself, we use a different time frame trading method to trade it on the edge. Draw the support level and know where you are. You see now? That's what we are talking about here. So when this one is closed, because it's a key level here, we will see. Are we going to have a signal on the daily chart? If there is no signal, we can't sell. Which means if you continue to go up like this. If you continue to go up, you can sell. Okay? See? Now there. Alright? So when one sees RSI bearish divergence, in order to trade it little by little, after the bearish RSI divergence, one is looking for break below, retest, or bearish trading, subsequent bearish trading setup that are formed after the bearish divergence. Why? As I said to you at the beginning, that was an excellent question. You may say, why? Little by little. It's because sometimes a trader will spot the bearish divergence. He or she will sell like this and then run away. We'll forget about it. She says he's happy, jump away. Oh, it's happy. Oh, was a successful trade, George. You are the man. And they forget about the trade. But it's not finished yet. You see? So they go and look for another trading setup, maybe another useless, okay, or ridiculous trading setup, and they end up losing. So the profit that they make here, they give it up. Instead of just, okay, being like a needle, zooming into this one, we sold it, okay, put it on your bearish watch list. It's a bearish divergence. You make money here, now keep it on your bearish list. You say, I want a rally up. So it may take maybe 1 month or 2 months before the rally is completed and the common settler is broken. All right? And then you will sell again. So instead of leaving money on the table, you sell it, it bounces up, there is another bearish trading setup, you come back again, you sell it. How do you sell it? You use the different time frame trading method. And you may say to me, George, I'm a new trader, you're talking about top-down trading method, you talk about different time frame trading method. How do you do that? Just YouTube search the phrase mastering top-down trading method by 24 stock trader YouTube channel. And learn about it, practice with a demo account until you master first the top-down trading method and then go live. That's it, very simple. Without the top-down trading method, one is not trading like a pro. So a financial instrument is going to go down. You want to time it correctly. So it's going to, now you see it went down, isn't it? It went down with this tendency bar. Suppose you sell it here. Now it went up. The timing is important. Those who sell it here, time it correctly. Now, you see, if you sell it again at the lower this tendency bar, because you see a bearish divergence, you see, Joe, you say it's a bearish divergence by the price, I lost money. Here it is, timing. And the top-down trading method will help you to improve your market timing. In order to achieve accurate market timing, professional traders use what we call area wave forecast plus the top-down trading method. Okay? So I hope I have managed to communicate what I need to share with you today about trading the RSI, the Relative Strength Index indicator or oscillator, bearish divergence, little by little, which means one step at a time. You sell it, now rally up. Sometimes the price may not rally up, but you are not alone. There are other traders out there waiting for that rally. You'll be surprised. You'll be surprised. That's what I say to traders. Sometimes you just need to be very calm, very calm. You want it to set nicely. You want that tendency bar to close. You want it to retest that key level. Sometimes you see that this, people want it to retest the key level, like I'm showing you now. You see here, this pink trend line. So you see, kind of say break it, say, yeah, it break below it. Bearish divergence, now common settler is broken. You are waiting for that rally to retest it. But look, as this tendency bar is open, people slow it down. You have to wait. You see, those traders who sold it here, they push it down a bit. But if they are not smart enough, you see, the price finally came back to retest that pink line. All right, so this will conclude our discussion today about how to trade bearish RSI divergence little by little. If this video has been truly useful to you, please let me know, please, by giving us your beautiful thumbs up. All right, thumbs up, please. I say, Joe, you have done a very good job. Okay, let's keep us going. We really appreciate the thumbs up. I don't deny it. You two creators love thumbs up. We can't lie about that, okay? However, we want to be honest also. If you think this is disgusting, or the most disgusting video you have ever come across on YouTube, mark it down. You may say, why should I mark it down? George, I like you so much. I don't want to mark it down. Mark it down if you don't like it. Because the rating is so important for me personally. I want to know how many people dislike it and how many people like it. It helped me to improve my recording and to make me a better YouTube creator. So don't be shy. You say, George, well, I don't know. I don't want to mark it down if you don't like it, okay? However, if you think, George, are you kidding me? This is an essential tutorial. All right, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. By the way, trader who share my video, I would like to say to you, thank you very much. I may not know you by your name, but just remember that anytime people share my video, it means a lot to me, okay? Subscribe to our YouTube channel today. Our YouTube channel for RSI Trading is dayprotraders.com. You see a lot of playlists about RSI Trading, RSI Divergence, RSI Oscillator, many names, many videos, more than 100 videos about RSI Trading at the Dayprotraders YouTube channel, alright? Okay, subscribe and be sure to click on the notification bell so anytime we are about to record a new video, you will be the first person to be notified. Sometimes I post video first on Facebook. Oh, you say, Joe, are you also on Facebook? Yes, I am. So my Facebook page is stochastic-MACD. Okay? So because sometimes I record a 5 or 7 video, I can't post them all on YouTube straight away. So what I'm doing, I'm posting some of them first on Facebook, some of them first on YouTube. Facebook want the video to be first on there. So I can't post a video on YouTube before posting it on Facebook, unless I'm posting the link of the YouTube video on Facebook. But if I want to post it directly on Facebook, it has to be the first time I'm posting on Facebook. So track me on Stochastic MACD on Facebook and Day Pro Traders. Subscribe at the Day Pro Traders YouTube channel. Okay. So this will conclude our discussion today about how to trade bearish RSI divergence little by little. Happy trading to you all, and I will speak to you soon. The financial instrument that we are analyzing today is Visa Incorporated. Alright, to summarize the video, we see a bearish divergence. Okay, we can trade it step by step, looking for bearish trading setup by the price, because the price must confirm the bearish divergence, which is a warning. Thank you for watching, and I will speak to you soon. Happy trading to you all.